Good morning, traders. It's Thursday, December the 6th. Taking a look at the charts. Yesterday, pretty quiet day in the markets. U.S. equities markets closed. Futures continued to run, but more or less fairly light volume. Not a whole lot of price action. Today, a different story. Yesterday, or 2 days ago, we were looking at the pre-market, our short-term 30-minute cycle here, showing that we've got a couple of days of downward bias. And of course, we had that huge gap up, which looks pretty dwarfed compared to the recent price action that we've seen of a big run and a big sell-off. But overall, gaps tend to get filled. The market was overbought, and we're in kind of sell-off mode. Overall, equities today down really big again, down 1.5% on average, the major indexes. You can see today's big red bar on the daily chart here on the right-hand side. Overall, we're getting down to an oversold territory. The market trying to form some type of basing formation. Obviously, we're seeing some pretty good selling in the market, and we'll need to see if it can find some support. But overall, we do have our longer-term gray cycle pointing to an upward bias overall. And we've got our blue cycle more or less trying to bottom out in the next day or two, which falls in line with our 30-minute chart here on the left, which shows the market should put in a bottom over the next day or two as well. And then we could start to see another rally, at least up to the upper end of this range, as it kind of oscillates through these lows and highs. Now, we do have some pretty crazy price action if we look at the really long-term chart. Let's go to the monthly chart and take a look at this cycle, something that you need to be aware of. Let's just zoom back a little bit. More or less, this is the monthly chart, and everything's kind of dwarfed because we go back all the way to 2007. But the type of volatility we are seeing in the market right here is very similar to what we've seen over here. It's also similar to over here. The big question is, are we at a major market top, or is this going to be a consolidation and the market takes another run and climbs? Now, we saw the interest rates almost go inverted there. That's usually a sign that 6 to 12 months out, we're looking at potential recession in the markets. And that is a big concern. I think it's one big reason why we're seeing so much selling here. It's kind of that story starting to spread like wildfire, and I think a lot of people are starting to dump shares. Now, more or less, if the stock market has a really strong close over the next 1 to 3 months, closes below the 2018 lows, we could very much so be in a bear market, just like over here. If it closes below these lows, I feel as though we could be potentially like right here, riding this fine line, this red bar that potentially goes down and forms a giant bear flag over a 6-month period, and then we go into a major collapse and bear market. So the big question is, are we going to break down and then kind of hover here and eventually sell off for a year or so? Very negative price action, or are we going to find some support and rally again? And nobody knows what's going to happen, but all the signs are slowly building. We've been talking about it since this volatility over here, that we are getting closer and closer every month to the end of a bull market. And I feel as though we are potentially a couple months away, depending where the monthly bar candle closes. Now, let's just go back to the daily chart. Let's get back to the shorter term price action, and let's jump over to the VIX. VIX up dramatically today, up about 15%. Getting back up into these previous levels. Usually when the VIX is high, it's time to buy. So we are seeing the VIX jump. When the VIX is high, it's usually a time to jump into the stock market. It is going to be oversold. It is getting close to support. We do have cycle lows bottoming out tomorrow. So all these things are coming together that the market should be putting in some type of at least an oversold technical bounce. It may only last a day, but if it has some traction, we should go back up to the recent highs and post a pretty good rally looking forward a week from now once we get that reversal in the market, the bounce. Taking a look over at, let's just take a peek over at the US dollar. UUP has been climbing up this support trend line, kind of bouncing its way up. And let's just zoom into the recent price action here. You can see more or less yesterday, big gap down on the US dollar, and it ended up clawing its way back up to regain the support trend line. But you can see we're breaching it more and more and further each time. These levels here found support right on the support trend line, bounced even over here. You can't see it, there's a cursor on it, but there was a wick that came all the way down here. So that was the first kind of break where it broke it, but it clawed its way back up. It's come back down. It's hit this level a couple times. Yesterday, gap below it, clawed its way back up, but just to it. It's going to be interesting to see where the market goes here. If the dollar starts to roll over, then we're going to start to see commodities start to pick up speed. And we talked about this in the last video or two ago, that commodities tend to outperform the rest of the markets in the Toronto Stock Exchange once the bear market is more or less getting very close, a month away, 2 months away, potentially 3 months away from happening. So if this starts to happen, we could start to see commodities pick up speed, and that'll be the sign that, okay, it looks like the bear market is getting close. Let's just jump over to gold. We've been seeing money move into gold. It's holding up on the above the 5-day. A nice tight little pattern here. Looks like it's primed and ready for another pop. Let's just zoom back in price here. You can see it's been trying to form this big basing formation here for the last little while. We've got this level right across here, and more or less it is testing and flexing its muscles right up at this area. If we start to get a pop and a break, the next level will be this significant high right across here. So overall, it is starting to work itself higher. We had a series of lower lows, and then we've got a higher low and a higher low, potentially a higher low. It's picking up speed, and we're starting to break above some of these highs. This was a significant standout high. It broke that. It also broke this one over here. So it's broken 2 significant pivot highs, and now we've broken this. I don't know if we broke it. I think we broke it yesterday. Yeah, we did. So we popped above it yesterday. So we are now more or less in an uptrend with gold. It's still flirting and trying to really kind of have an extension move and really break away from this rounding formation. But overall, still looks really strong. If you look at the cycles here, though, we do have a little bit of a consolidation. We do have the shorter term cycles pulling back. So maybe gold is going to, maybe it'll extend and chop around up here for a little while. Maybe it'll pull back and consolidate here for a little while. But overall, I do feel as though it is building a base, and it's just a waiting game before we start to see money rotate into gold, silver, and miners, and this big move starts to unfold in the precious metals sector. Taking a quick look over at miners real quick. Miners continue to kind of flounder down here. They haven't really picked up speed yet. They are holding their ground, but we just haven't seen them really start to break out. It's trying to, but again, just no real excitement in that sector yet. Looking over at natural gas coiling, building up a ton of energy here. The big question is, which way is it going to break? This here is a big pennant formation. Typically, pennant is a continuation pattern. Previous move here, if we were to chart it, goes up, consolidation, huge rally, consolidation. Technically, if this is a pennant and it plays out, we should see a breakout and a huge rally to the upside. That being said, we do have our cycles all pointing to lower prices, and whichever way it breaks out of this pennant is probably going to be a fairly significant move. And the nice thing about this type of pattern is it does have all these minor little pivot highs, where each of these candles high are not too far from the other, meaning when one is broken, any trader who is short has to cover, and it creates buying pressure, and it'll push it to the next level, which will trigger another wave of different time frame traders, and it kind of runs through all the different styles of traders, and you get this huge green up bar in price that could move. And it's the same thing to the downside. We do have some pivot lows, all these candle lows, a little more spaced out on the downside, but we do have all these little lows here where traders will have stops set. And as it starts to break down, it'll trigger them. And of course, the market typically falls faster than it rises, so it could fill these gaps fairly quickly if it does break to the downside. But it goes to show you all these different levels to the up and the downside that will trigger, and why you get such a powerful move out of a consolidation that is kind of coiling like this and building up pressure. Looking over at crude oil, down 3% this morning. Crude still trying to find a base. We have the support level that it did find support. It got above the 5-day for a few days here. It's back down below it. Overall, longer term cycle here is showing that we should start to be moving up with crude oil, but it just hasn't really had any real traction yet. It's simply just stalled its downward move, but it's still kind of stuck under this more or less this resistance zone through here. This is a potential little bottoming formation. If it can get above these levels, then we might start to see it continue to go higher, but overall it's still struggling here for it to find a bottom, and this price action looks like it could still potentially continue to flush down and go even lower. Last but not least, let's just take a look. This is the Toronto Stock Exchange, the daily chart. I zoomed all the way back. We're back about a year in time. And more or less, the Toronto Stock Exchange, typically very commodity heavy resource stocks, typically outperforms the US stock market near the end. Now, overall, the market here, the Toronto Stock Exchange, looks like it's trying to put in a bottom, very similar to what we've seen over here. Maybe there's a little bit more downside. Maybe it's going to continue to work itself out. But overall, I do feel as though we could start to see commodities start to take off and go higher. Let's just take a look at the commodity ETF, the Commodity Index Tracking Fund. You can see it is gold or oil heavy, so it does track a lot like crude oil. But overall, there are a bunch of different commodity funds, DBC, DBA for agriculture, GCC, which is gold and oil, and a few other commodities. I do feel as though these commodity funds are going to become more of a safe haven. They are oversold commodities if they start to firm up on average. With the dollar breaking down, we should start to see these commodity funds start to move up and actually outperform the overall stock market. So we'll keep our eyes on that. Maybe look for some positions there and kind of take it one day at a time. Huge volatility until the market really shows we've put in a major bottom. We've been calling a bottom for a while. The market always moves on its own time frame. No one knows exactly when it's going to bottom. We just have to let the overall stock market, here's the SP 500, it's trying to carve out a high volatility bottom. And at this point, we're still holding up. And we still have this is our 2018 more or less low in the market. If this blue line is broken, which is a long ways down from here, then we could be very much so actually in a bear market. And if we actually throw a Fibonacci extension, we can see where this potential move, if this is a bear flag, a continuation, where's the downside target? If we go from the high up here, we go from the high there, down to this low, up to this high. Whoops, let me just re-grab that. Here is the Fibonacci extension of where this market could drop if it collapses here. From there to here and over to here. So there is our first potential move. Now, if we go the more conservative way, we can go from a closing bar and go down to a closing bar and go up to a closing bar. This will give us our kind of our boxes, our range of where price could potentially collapse to if this pattern here is a bear flag and we have that continuation move. We come back down, test in this area, and then potentially go all the way down into this area down here, which would more or less put us right under the 2018 lows, which puts us in a bear market. And it may consolidate and work itself higher for a few months, but then it could easily be, the bias will be to the downside and we'll be in a full-out bear market from a technical standpoint. So still a long ways away. A lot of damage has to be done for that to happen, but it is a potential, and our long-term cycle shows that we do have the potential that this could unfold, and we got to be aware of that. So that's why we're keeping positions really nominal, very small, really not really taking any positions. The market is all over the place, huge volatility. It's a great way to get caught on the wrong side in a big way. So we're just dabbling with very, very small positions. Whatever your normal position size is that you trade, that you're comfortable with, we're only trading a quarter of that simply because volatility is extreme and the market's ping-ponging around. Very tough to trade these type of markets unless you're a day trader or momentum trader for looking for the intraday or the one-day kind of swing in the market. Anyways, that's it for now. Take care. Bye-bye.